Guys, welcome back to the channel. Thank you very much for stopping by once again. Today what I want to talk about is basically a strategy that I've been using to kind of grow my account fairly quickly. In my opinion, it's worked out pretty well. Now you can do this, many times a week, many times a month, depending on the stock and how soon you can get out of it. The point of the dividend capture is basically to buy the stock before the ex-dividend date and get out of it either on the ex-dividend date or any days afterwards, as long as you're at least breaking out even, coming out with a little bit of a gain, or you can also come out with a little bit of a loss as long as your dividend payment is greater than what you're actually losing, if that makes sense. Now, I use TD Ameritrade and E-Trade to kind of look all the information on a stock before I buy into it. So, you can look it up on Yahoo Finance or you just Google it and, all the information will come up. So as you can see here, ticker symbol CODI, it pays out a dividend of 36 cents per share. Now, in order to qualify for the dividend, you have to buy the stock before the ex-dividend date or own it before the ex-dividend date. Dividend payable date is on the 24th. Dividend yield was above 9%, is above 9%. So as you can see, that's a pretty good dividend yield. Now, I'm only looking to get in and out. I'm not looking to hold the stock for the long term and collect the dividends, but you can also do that. But in this case, we're only talking about the capture. Another thing you want to look at is on the NASDAQ website. If you put in the ticker symbol, it'll give you a history page on the dividend payments. As you can see, this one's been paying out 36 cents since 2013, and it's been pretty steady. So even if I were to stay a little bit longer on the stock, I wouldn't mind, because I kind of it makes me feel like I can leave my money in there and receive the dividends and then just get out eventually on a later date. However, let's go back to Robinhood, and I'm going to show you exactly what I did. Now, as you can see here on my history page, I did try to buy the stock on the 15th for $14.85, 285 shares. I did not get in. I was not able to get it at that price. Then I tried at $14.95, 284 shares. I was not able to get it at that price. And then finally, I actually got it at $14.99. I bought 283 shares. Why 283? Because 283 shares times 36 cents per share that I'm going to get equals around $100, $101 and some change. So that was basically my main goal, and that is why I bought 283 shares. Now, right after the ex-dividend date, the stock did go down, and I ended up buying 10 more shares at $13.95 on the 22nd. And then I ended up buying 7 more shares on the 22nd at $13.95. Now, for these 17 stocks that I bought after the ex-dividend date, I am not going to get paid a dividend because I didn't buy them before the ex-dividend date. But I was hoping to do a swing trade on these. That's what I was looking for. That's why I bought them at that lower price. And as you can see here, I got a payment of $101.88 on the 24th for 283 shares at 36 cents per share. And if you see here, I ended up selling all 300 shares at $14.80 on the 30th. You're going to say, yeah, but you bought them at $14.99. Why would you sell low? Correct. Now, I could have waited for the stock to go up a little bit more. However, when you buy into a stock, your money is basically tied up until you sell with either a loss or a profit or break even. In this case, since I'm using that capital to do swing trades and capture dividends, throughout the watch list that I have, then I ended up selling with a little bit of a loss because I had another stock with another dividend and a bigger swing trade that I was going for where my gains were going to be a lot more. So that's the reason I got out of the stock earlier. However, I ended up making $70 instead of 100 on this stock. Remember, I got that $100 dividend, and I ended up coming out with a small loss. So that's what I mean. You can still come out with a small loss as long as your payment is higher than what you're losing, if that makes sense. Remember, you're basically using the same capital over and over again throughout the week, throughout the month. Rinse and repeat. Now you can use the dividend gains to either reinvest them or just keep them and pay some bills at the end of the month. It's completely up to you. But it's a great way to kind of grow your account fairly quickly. It has worked well for me. It might work well for you. It all depends on the strategy and all that. But I kind of wanted to share all this with you guys so you can see kind of how it works. Now, one thing I would recommend is having access to all the real charts. For example, Robinhood is Robinhood. It's free, it's great, but it is very limited to what you can see. I myself, I use TD Ameritrade Thinkorswim platform. No minimum deposit required, completely free. You have access to level 2, charts, time and sales, create a watch list, alerts, and all that. So basically, I wake up, I create all my alerts in the morning for all the stocks that I own, and then that's how I'm, constantly buying and selling here on Robinhood. Picking up good entry points and exit points by looking at the charts on Thinkorswim platform. But that's just me, of course. Thank you very much for watching, guys. If you guys have any comments or questions, feel free to leave them down below. I'll make sure to kind of follow up with you guys if I can. And I'm looking forward to making more videos. I did put a link down below for those of you that want to download the Robinhood app. You'll get a free stock if you don't mind using it, and then we both get a free stock. So that'd be great. In the meantime, I'll see you guys on the next video.